Ladies and gents, we are probably witnessing a future documentary in the making right before our eyes. Except for this doco, we know that it's coming before it has even started filming. It could be The Big Short 2.0, and Michael Burry, no surprise, might again be one of the stars of the show. And this current situation with GameStop is seriously one of the wildest and craziest things that I've ever seen in the stock market. The people have risen up together to stick it to the man in a big way. But it also gets a lot deeper than that. And not to mention, according to Michael Burry, the face you see on screen, the face of a man who has potentially made up to $271 million from this GameStop shenanigans, is actually upset and feels that this situation should have legal and regulatory repercussions, which we'll get into later. So I'm sure you all know Michael Burry is most famous for his bet against the American housing system in 2007-2008, which not only led to a blockbuster movie, but also led to him making $100 million as well as $700 million for his firm. He was able to sniff out a situation that nobody else could, and even though he presented his ideas all across Wall Street, everyone just thought he was crazy. And in classic Burry fashion, he's made another monumental play on GameStop, a company that is all over the news headlines at the moment, while some other Wall Street hedge funds like Melvin Capital, for example, were caught sleeping and now have been left in his dust. And I can't say that I'm surprised. So firstly, if you're not familiar with GameStop, they're a massive retail gaming company and they actually own EB Games, which I'm sure the whole world knows, but just like Blockbuster, their business model is old school and outdated and has struggled to keep up with the times. And the proof is in the pudding, as 90% of their shareholders were shorting GameStop stock. In fact, GameStop was shorted so much that there were actually more short positions than there were shares outstanding, which is a crazy situation. And the good old people from Reddit, from Wall Street Bets, have recognized this situation and tweaked the system to their advantage, screwing some of the big corporations out of some very big money in truly epic fashion. And don't worry, I'm going to go over all of this in detail in a moment. I just wanted to paint you the picture before we got stuck right into it. So where does Michael Burry from Scion Asset Management come into this picture? Well, he actually identified that GameStop might have been in a situation where they were actually undervalued, and he was urging big hedge fund investors to actually buy back their positions, basically to close their short positions and buy back the stock. And keep in mind, this is when the stock price was still low. And since then, the stock price has soared, reaching nearly $500 at one point, and just look at how volatile it has been. Even yesterday's fluctuations alone are out of this world, and in post-market it's gone up another 62% as well, not to mention the fact that it's gone up about 1,500% in just recent months. So what we're looking at here is Scion Asset Management's holdings from their most recent 13F filing in September 2020. And you can see that they held 1.7 million shares in GameStop, and that's after reducing their position by 38%. And as this story started to gain more and more momentum, picking up in the news, picking up in Reddit, all over the place, Robinhood investors, you get the picture. Due to Scion's huge investment position in GameStop, in just the last few months alone, he's potentially made up to $270 million, which would have been more like $480 million if he didn't sell off 38% of his position. And the reason I say he potentially made up to $270 million is we don't have access to real-time data. The last thing that we have is the 13F filing in September. All we know is that if he rode that wave, he would have made a hell of a lot of money, up to $270 million in just a few months. But one thing that he has done is he spoke to the media through an email interview, and he said that he's neither long or short, but he declined to comment on when he sold the stock. So we don't know exactly when he sold his position, but we do know that either way he would have made a buttload of money. And yes, buttload is an actual metric. Google it. And the craziest part that really shows you what kind of person Michael Burry is, even though he made a truckload of money, yes, a real metric, although a little bit harder to calculate, he's actually really upset about the situation and has called for legal and regulatory repercussions, saying that this is unnatural, dangerous, and insane. Which begs two very important questions. First of all, what in the world is going on with GameStop? And second of all, why would Michael Burry be upset when he's just made up to $270 million? Well, let's take a look at it. But before we do, just know this is not financial advice. I'm just a guy on the internet who's fascinated by these sort of topics, and I really just wanted to talk about it. Don't forget that. So let's take a step back from a second so I can explain to you what shorting is, and also explain to you what has gone on and how these internet warriors, these Reddit users, have shaken up the system maybe for a very long time. Basically, short selling is betting against the success of a company. So what would happen is you would borrow shares, sell them immediately, and then buy them back at a future date and return the original investment to the owner, and whatever the difference is, you keep in profits. And what's contrary about this to most investing styles is that in short selling, they're actually hoping that the stock price goes down. But one crucial element that is not optional, and it's the element that got these investors, these hedge fund investors, into some serious trouble, is that once you short these stocks, you have to buy them back and give the original shares back to the original owners. That is not optional. So effectively, to make it really, really simple for you, to short a stock, you borrow stock in a company, in this case, GameStop. You short sell the stock immediately at the current market price. Then you buy them back later when the price drops, give the original shares back to the owner, and keep the profits on the difference. However, this is where the situation gets super funky. In GameStop's case, a very, very unique situation, some Reddit users recognized that a lot of hedge fund investors had a lot of money shorting GameStop stock. So they realized that if they started buying shares and putting call options, they could influence the price up high enough that would force these hedge fund investors to buy back their original share positions, effectively closing their shorts. And that's exactly what happened, and that is known as a short squeeze. Now, a short squeeze is where a stock price goes up very, very dramatically, very rapidly, forcing the short seller to buy the shares back and return them to their owner to cover their losses and avoid potentially much higher losses. And in GameStop's case, not only did it go up 1,500% at its high, but it went up very rapidly. And this is part of why Michael Burry is really upset at the situation, even though he made a buttload of money, because he feels that the market was manipulated and there should be repercussions for this. This is exactly why short selling is so risky, because the losses are unlimited. If you think about it like this, if you buy $10 worth of stock, the worst thing that can happen is it can go back down to zero. That's the most you can lose. But if you buy stock at $10, who's to say that it won't go up to 100 or 1,000 or 10,000 or 10, 100 million, billion, bajillion thousand? There's no limit to how high a stock can go, which means there's no limit to how much money you can lose on a short. And something important to know is that generally the people who short stocks are hedge funds or big corporations, not the average person like you and me. We don't float that kind of money and we don't float that kind of a risk. And because the person who is short selling has an obligation to the original owner of the shares that they must buy their shares back, when it gets to a point of a short squeeze, when the stock price has gone up really dramatically, they have to buy back in. And what happens when they buy back in? The share price goes up. And what happens when the share price goes up? The other people who have shorted start to feel the pressure and they start to cover their losses by buying more stock, which means that the stock price goes up. And as long as people don't sell their positions, the investors from Reddit, like the Wall Street investors and the Robinhood investors, if they don't sell their positions, then that stock price is going this way. Or this way. I don't know which way you're looking. It acts exactly like a domino effect, and that's what the Wall Street Bets investors were counting on, and it's exactly what happened. Now, what is so controversial about this, and it's what got Michael Burry so upset, is that the market has been manipulated and influenced and inflated the prices, which is typically not allowed. But this is kind of a unique situation, in my opinion, where these people on Reddit didn't necessarily do anything wrong because they're just talking about their different investment styles and strategies, and they've come up with a great idea. And there's really nothing wrong with speaking to people about your investing ideas. These people are grown-ups, let them invest how they please. Just because the big dog sitting at the big dog table got themselves in a sticky situation that they couldn't get themselves out of, doesn't mean you have to stamp on the average Joe, the average American who actually outsmarted the system. I don't know that that's fair. But what I do have to say is, while it is very entertaining from the sidelines, what can become really harmful is that people don't always understand what is going on, and they'll see GameStop going up and think, I want to get in on that. I want to become a millionaire in the next couple of days. But the reality of this situation is they don't understand necessarily why the stock price is going up, what's actually driving it. And at the moment, it's nothing but momentum. Nothing about their financials have changed. Nothing about their fundamentals have changed. Absolutely nothing of note has changed for GameStop. They still have a business model that is old school, struggling to keep up, probably not going to continue into the future. And the stock price is only going up by the momentum that these guys on Reddit created. So if you are interested in buying stock in GameStop, I'm not going to tell you to do it or not to do it. That is not my job. You're a grown-up. I would just say make sure you understand very, very clearly what the situation is. And if you don't understand it, then you probably aren't going to be able to make the most of this situation. So please proceed with absolute caution. So before I close this video off, to give you some Reddit terminology, TLDR, too long didn't read, the average American Reddit users online recognized a very unique situation where they could stick it to the man, stick it to the corporations of the world, and make a buttload of money in the process. And that's exactly what's happened so far. Will it continue that way? I don't know. Maybe, maybe not. It's so hard to tell. I am no expert and I've never seen a situation like this. But one thing I do know is that when the man gets himself into a sticky situation, the battle axe be swinging, and I do not want to be in the way of it when it happens. But I definitely will be sitting on the sidelines with a bucket of popcorn watching for exactly what will end up going down. Guys, thank you so much for joining me today. I hope you enjoyed the video. If you did, give it a big fat thumbs up. Subscribe if you want to hear more from me in the future, and I'll catch you next time. See ya!